coach thousands of people from all walks of life, and I've learned what actually moves the needle, including what helped me do it twice by the time I was 39. This video is going to be your roadmap. If you follow these simple principles, freedom is not only possible, it's predictable, maybe even inevitable. Now, why is most financial advice designed to keep you dependent, right? Keep you broke even. This is the problem. It's like you trust financial advisors, you trust the traditional stuff. They always tell you, hey, just keep saving. Even if you have a financial advisor, have you ever noticed that they're always telling you, keep saving, keep putting more money away? And what do they say the next year? Keep saving, keep putting more money away. What do they say next year? Keep saving. Hey, we might rebalance your portfolio, but keep putting your money away. It never changes, right? It's just market goes up, keep putting money in. Market goes down, put more money in because it's on sale, right? Notice it's never a bad time to invest in the stock market when it comes to financial advisors. It's always a good time. And that's because what I learned when I used to be a financial advisor, what I learned was it's always a good time because the financial companies are the ones that pay me as a financial advisor. I get paid from them. They're the ones that teach me all the rules about money. They're the ones that teach you the rules about money. They're the ones that seriously go on all the financial radio shows and the talk shows on TV and everything else. They're the ones paying for those programs, and therefore they're the ones that get supported with their falsehoods telling you just keep packing that money away and compounding interest because the more you do it, the longer you do it, the better. Compounding interest is the eighth wonder of the world. All that kind of crap you hear all the time. Remember, financial advisors keep you relying upon them, thinking that somehow they do something special, but guess what? They don't. They just a lot of times they'll just say, what's your risk level? And they have you take a little questionnaire and you figure out, oh, you're aggressive or moderately aggressive, or maybe you're conservative. They say, great, here's the perfect fund that's just for you. Again, created for them by the companies they work for. And those companies want you to do that because they want you to keep putting money in, keep adding more money to it so that when they make their fees, their guaranteed fees that they always take out, whether you make money or not, they will always make more money. That's how financial advisors make their money. Now, even the ones that might be fee-based, that's better, but still, they're still stuck in that ecosystem. I know because I've gone to those trainings. I've seen what's being taught. It's always the big companies training financial advisors to teach it what they want you to teach as a financial advisor, what's in their best interest as a financial institution. That is so bull. That's BS, right? You're always dependent upon them, and then you're going to find out when it's too late that the only one that made a lot of money and that actually came out on top was the financial advisor. Not because of their own investments, because they're still doing crappy investments too, like you were, but instead it's because they were making commissions on you, whether you made money or not. Whether the market goes up or down, they're always making money off of you. I think that's almost criminal, don't you? So, long story short, it doesn't work, and that's why I left. And that's why I actually went to look for other options and other alternatives. I started looking at things like in real estate investments and things of that nature, into business and into the oil and gas worlds and the alternative investment space, which is so much more abundant. And it's the stuff that as a financial advisor, they never offer to us because we were legally licensed to not sell those things. We were only licensed to sell mutual funds, annuities, insurances. That's it. That's all it comes down to. Simple, yes. Effective, no. So here's the things that work for me. Now remember, I mentioned I had to do it twice by the time I was 39 because why? When I was able to retire when I was 28 with enough passive income coming in, eventually a couple years later, the recession hit. I lost a lot of money. I had to rebuild again and do it again the second time by the end of 2016. So I had to do it twice. The cool thing is I was able to use the same 5-phase system with everyone, right? And so let me talk about these 5 phases because this is what we do when we work one-on-one with our clients in this work optional blueprint. Number 1, you got to lay the foundation for financial freedom, right? This is a start. You have to do that cash recovery audit, which means we actually analyze your cash flow, your income, and your expenses, even itemized expenses, seeing like where the money's going. Are you overpaying on taxes? Are there ways we can do something better that way? Are you overpaying on debt? Are there ways we can pay off debt better, right? Are there things that we can do? Maybe you just got money sitting on the side. Maybe you're great at your cash flow, but you're just packing money away and you're asset rich and cash poor. Well, we can create a strategy just for you. What's actually working for you? That's where we go to the second part, which is selecting the right investments. That's phase 2. Now we got to start saying, based on your unique situation, do you want growth or income right now? What's the thing you really want? There are different investments and different things for different people. And even then, you start to look and analyze this stuff, right? You start to find out what do the wealthy invest in? What are the people doing that have $25 million or more, that have family offices where they do hedge funds and things like that? What are they investing in? Because you know what? They're not just thrown into the same old cruddy little Vanguard funds. No, they never do freaking Vanguard funds. No, what they're doing, they're doing things that are like private investments. They're doing things that might be investing in apartment buildings or self-storage units. They're also investing in businesses. They might be investing in stocks, but it's a very different kind of mix than what you've been taught to do in these mediocre, lame mutual funds. So we start to find out like what's that right fit for you, and we do this done with you due diligence. We even actually we even have our own vetted investment operators that people can actually go and talk to. People that have been paying out for at least 15, 20 years that have been consistently paying our investors, right? Or paying their investors even for that matter. People that are actually experienced, people that haven't just shown up recently, that aren't the charlatans, that aren't trying to rip you off. Now, does this mean it's guaranteed? Of course not. But you start to really do that due diligence and understand what it is, but you know which question to ask because we're doing it with you. So then you can then move that third phase is once you feel comfortable with the right options, you can take action. You actually start to take action. You start to invest money in those plans. You start creating that passive income there. And as you're starting to take action, we move into the fourth phase, which is protecting your assets, right? Because here's the thing. You can have offense all day long, but I'll tell you one thing. Tom Brady never would have become Tom Brady had he not had a strong, solid offensive line. Because if he had a weak offensive line that people just broke through and sacked him every time, and then he got injured, he would not be like that 40-some-odd-year-old quarterback playing and winning a crap load of Super Bowls and having almost more rings than fingers, right? No, he was able to do that because he had a great offensive line protecting him. You got to protect your assets too. You got to shield your wealth with legal strategies. Stop overpaying on taxes, which can also be worked on with having the right corporate structures. You can actually get rid of life's what ifs by making sure you have the right insurances and things in place, right? All those things in place so that no one event can take all your money away and steal it from you to where you're like, great, that was awesome. This even includes, do we have money in the stock market or not? Because the truth is, if you have too much risk there, you can lose money. And then we move into that fifth and final phase, which is multiply your passive income, right? We don't just worry about trying to create compounding interest. We try to compound your income. So you start to double down on what actually works, right? You start to really focus on what are those investments that were good. Maybe we put more money in those investments, right? Maybe we start to expand it to new opportunities and start to build it out and diversify more, right? And make sure that we're aligned and on track. This is why we never just drop our clients, say, hey, cool, you paid us, we're out of here, right? It's like, no, we keep moving you along for years to come. That's why we call it lifetime support, because literally we're here to support you for life to make sure that you not just meet your goals, but those goals keep growing and going, and that can even lead to generational wealth to where you can actually create a wealthy family, not just a wealthy life. Right? That's the key. You create a legacy, not just income. Now, I told you this is the last financial video you ever need, but please like this, subscribe to our channel because there is more. In fact, this next video might be good if you want to go deeper down this rabbit hole because that one was good, but this one's better, right? Go check out how in these 7 minutes, how you can become financially free. Check this out because I think you'll like it.